Hey everyone, in this video I'm going to answer which is the better dividend stock to buy. Is it Caterpillar or is it Cummins? To answer that question, I'm going to compare these two on their dividend yield, on their revenue, on their profit margin, on their cash flow, and finally on valuation to answer which one I think is the better dividend stock to buy. Let's jump right in, starting with the dividend yield. And this metric, Cummins beats out Caterpillar with a dividend yield of 2.71% compared to a dividend yield of 1.76% for Caterpillar. Now, for me, when I'm looking at stocks to buy, the dividend yield is only a small factor in my decision in picking which one is the better dividend stock to buy, because the gain or fall in the stock price could be larger than the dividend yield. And so I'm more interested in the factors that could change the stock price than I am in just solely the dividend yield. So let's look at some of those factors. Starting with revenue, you'll notice a cyclical nature for Caterpillar, ups and downs here, and that's the nature of its business. Spending in this category goes in cycles, and that's going to be the case for the next several years as well. But right now is a good cycle for Caterpillar, with revenue jumping up to 64.77 billion, and that's likely to continue as an increase in manufacturing spending fueled by onshoring or nearshoring, because companies now want to get their manufacturing facilities closer to their customers and not rely on outsourcing or shipping products in from lower cost to produce countries. That is being coupled with the fact that governments worldwide passed several stimulus packages that included infrastructure spending, and that's causing an increase in demand for Caterpillar's products. Meanwhile, Cummins is also increasing revenue over the trailing 12-month period as an increase in demand for trucks has fueled a rise in demand for Cummins. At the same time, the company is transitioning into cleaner energy trucks, and so it's preparing itself for the transition of the business and the industry. Cummins is, I would say, slightly behind in this transition, although I think it's got enough time to catch up. I'd rather be slightly behind in this transition to cleaner energy instead of being ahead, because the technology is just not there yet to support the transition, while governments are trying to push it on the participants, industry participants. The technology just isn't there yet. The cost of ownership, the convenience, all of that, it just favors the traditional diesel engine right now. But governments are really trying to push the switch to cleaner energy. They're incentivizing. And so I don't mind being a company that's slightly behind in this regard, in the transition. The next thing I wanted to consider is their operating profitability. And you'll notice Caterpillar has done a great job boosting its profitability since 2017, rising from around 5% all the way up to 17.62%. Meanwhile, Cummins has been slightly trending downward and ending at 9.45% as it increases its investments, transitioning to the cleaner energy. And also, remember, the company's cost of goods sold has increased meaningfully, and it had been more exposed to product shortages compared to Caterpillar. Caterpillar wasn't exposed to the supply chain shortages and the impacts, the chaos, as much as Cummins has been over the last few years. And a similar story with cash flow from operations to sales. You can see Caterpillar doing a better job at 15.5% most recently, and Cummins at 6.76% on a downward trend here from 2014, with Caterpillar also on a downward trend, but only slightly, while Cummins is a more meaningful downward trend from a CFO to sales ratio of around 12% down to 6.76%. And finally, I wanted to look at valuation, and Caterpillar is only slightly more expensive than Cummins on a price to earnings ratio of 13.49 compared to 11.97. And I do believe that Cummins should be trading at a discount right now, given Caterpillar's superior operating metrics we saw earlier. I think this premium is justified here. I think if I was to pick one of these two dividend stocks to buy today, I would pick Caterpillar at a forward PE of 13.49.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.